Okay, good morning, everyone. Um, Market is about to open, and let me just go over to NQ, and then I'm gonna go over to gold as well. Just give me a second because I need to rearrange my charts. On the right side, you see a 30-second Nasdaq chart. On the left side is a 500 tick chart. Oh, hey, Stop It Seller. Good morning, good morning. Good morning. Welcome, welcome, welcome to the stream. I quit trying for trading. Oh, wow. How do you mean that? Well, thank you so much, man. Don't ever say quit, you know. That's the main thing. That's the main thing. Never stop. I mean, if you like trading, I mean, I love trading, then you should never quit. But first of all, let's check what's going on in the higher time frame because I'm a little bit behind myself. Let's check things. Oh my god, this was yesterday. So yesterday I managed to recoup some losses. Okay, it's not locked. I have to see what's going on. I had no time this morning to rearrange my charts. Is it locked? No, it's not. What the hell is going on? Okay. This is midnight open. On the right side is a 15-minute NQ. Just saying. 15-minute. I just want to quickly rearrange the chart. Okay, all right, now it's fine. 900 level. This is not important. This is not important. And the 15k level. All right, we can go over now. Okay, guys, I'm gonna go over gold as well. I just want to see what is going on. This is a 15-minute chart on the right side on Nasdaq. On the left side, I can actually, you know, I can change it for, okay, let's go with the 15 on the left side. And let's go with a 5-minute on the right side. So Nasdaq. As you can see on the left side, there is just basically nothing going on. No imbalance or anything like that. On NQ, we have a low here, which is from yesterday. Is this from yesterday? Hold on. No, this is from FOMC. Yeah, this is from FOMC low, which is not too far away. It's quite close, to be honest. It's actually 20 points away, so that could be a potential target. This is at 925, so let's just mark this up. 925 is a potential target. I'm gonna put a line there. Oh, all right. So that's a potential target. Let's see what's going on the 16-minute, which is a 1 hour. Basically nothing. On the 1 hour, nothing is going on. Still has a little bit, not too much, a little bit of space here that was left open, which is this. Let me zoom it out. So we do have a volume imbalance, if I may say that, because of the gap from the reopening right there, which is 967. So I'm gonna put, is it a round number? Yeah, 67.75. 967.75 right there. So these are the two main targets in terms of draw on liquidity. We're gonna keep a close eye on it, and we do have a fair value gap as well. But I'm gonna go back to the 500 tick chart because the volume is low at these hours. So these are the cases when I like the tick chart. And on the right side, I have multiple charts, by the way, on my other screens, but you guys don't see that. And I just want to give a picture. Then we gonna go to TradingView. So on the 60-minute chart, which is this one, what the hell is going on here? Don't need that. Some main levels are here, the 900. Oh, I just messed it up. All right, great. 25.50. Is it a 25.50? Almost. Okay, so this is cool. And we have this. This vertical line is the midnight open. This dotted line is the midnight opening price. New York, of course. New York midnight open is here. So we still have a fair value gap, and I'm going to... There you go. Now this zone here, I'm gonna make it a little bit more there. So this zone here could be a potential liquidity target as well. But since we're so close to this FOMC low here, it can also do the same for us. Now this is a 15-minute chart again. And honestly, let's go down to the 30-second chart. If this would give me like 25, 35, if this would give me a nice 37.25 is a potential target as well. 37.25 is a 15-minute low. So if I would see some displacement, which could be happening right now, 25.75, let me mark this up. Then we can almost say that we're starting to jump in to a trade we might gonna go short, but we still have to wait. We still have to wait. London kill zone, I mean, not the kill zone, but London open has happened. We have a low of 43.75 and the close at the same price. So we have a very, very, very tiny fair value gap here. Right here. It's not exact, but there you go. This could be a great entry. And I just took it. Maybe I shouldn't have. I don't know. I was waiting for this. And so the big question is if we're gonna go to take out at least the 15-minute low. Maybe I just close it if I don't see the kind of price action which I want to see, because then obviously we're gonna go for the liquidity on the upside. I just thought that, you know, we can still do a spike down below this 15-minute low. 15, yeah, it's on the 15-minute. Sarvesh is here. Hey man, how you doing, my man? How you doing? So overall target would be the 25.75. I would love to see how you doing this morning. I would love to see that level break but it all depends. No major news event yet in this London morning, and this could be tricky. If price action is going to just, you know, consolidate here, I might just close it. London opened 10 minutes ago. If volume is not giving us the move which I'm looking for, then I'm just gonna leave it. I'm staying out of the market until NFP. Yeah, maybe you do it. Yeah, maybe you're doing it right. I think I shouldn't push it as well. I was eyeballing before the stream with some lows here from 2 days ago from FOMC, and I thought because it's just, you know, climbing down, it should be taking out at least a 15-minute liquidity, which is at 37.25 right here. That would give me enough space to put this to break even, to wait for it to go down. So this would be a break-even trade if everything turns out good. If it goes down here, so it's risky. It's risky, I know, because it's NFP. It's NFP, and I know it's risky. So. So I'm just looking for, this is a 15-minute level right here. I'm going to put a hard stop here. This is not my final stop loss. I'm just going to move it as I see price going. And maybe I should just close it, right? Not the price action I was hoping for after London Open. Very tricky, honestly. Even on the 500 tick chart, it just, I don't know. It's a little bit crazy. I was really hoping that it will tap down here so I can put this to break even and see how it goes. It's really not that far. It's just like, yeah, 10 points away. But if it's not, then, you know, it's not. London Open was here. Started to go down, but still did not reach for that liquidity. Bad news for me. Bad news for me. Oh yeah. Yeah, I agree. It can be happening. It can be happening. Yeah, I marked it as well. I mean, not on this chart, but on higher time frame. We're gonna go to TradingView and check it out. I'm just gonna see what it does here, and if it starts to climb up, I'm just gonna close it manually because I just don't like this movement here. So I should just exit with a relatively smaller loss here if I have to. Or, you know, if it takes a nice displacement, I can still go long to attack the hourly liquidity up there. I guess we'll see. Of course, the market is rigged. It's not looking good, honestly. It's not looking good. I'm not complaining though. Yeah, I might have to close it. Yeah. It seems like I do have to close it. We might just go for the hourly fair value gap, which starts at 67.75, which is also not that far. But I was really hoping that it will grab some more liquidity from down there, but anyway, I know we're below the midnight open. Damn you, damn it. Damn it. Volume is slow. I thought that, you know, London Open will give us this tap down here. But it's not. So anyway, then we're gonna go for the 67 level, which is completely okay, of course. But then I have to change some, I mean, I do need some other, how should I say, requirements for that to happen. Let's check the 1 minute chart. Actually, the 1 minute did a structure break here. Damn it. I wasn't taking that into consideration. That's the 1 minute chart. Here was an entry as well on the 1 minute. Now the question is that if I go out to the 5 minute chart right here, this is a 5 minute, is this going to be enough for it to go up? Because on the because the reason why I wouldn't have taken the long yet, because the 5 minute didn't really took out significant lows or liquidity down here. That's why I was hoping at the 37 level. And so that's why I thought that we're gonna tap down there. Clearly, so far it's not the case. And if that's not the case, then the 67.75 level could be a reasonable target. I just don't know if I should jump into a long if I close down this one right here. I really need a nice movement to jump into a long, you know. That would be something I would have to look into. But if I go down again to the 30-second time frame, yeah, damn it, inversion fair value gap. I think I might be offside here, boys and girls. Yeah, unfortunate, very unfortunate. I was hoping that, yeah, and it will take out this high, just 2 points away. Now I can give a chance that for this one to take out this high, and then we'll see if it wants to continue higher. And if it will, then I'm gonna be exiting about 10 to 12 handles from this one. Otherwise, I thought that we go down to 25.50. That would have been a nice target. So I'm gonna be watching this closely. This is a hard stop. It's not my final stop, but my finger is gonna be on the close button. Or if I have to, I will have this one moved closer. So far, anything can happen here. What the hell is this music? Okay. So, I'm not sure. I can take a peek on gold until we wait, but just for a brief moment. Here is gold. Let's go. The 1 hour, as usual, the 1 hour is a mess. Nothing is going on. 15 minute is a mess. Nothing is going on. 5 minute, a bigger mess. So that's it for gold, guys. Nothing. That was gold. I'm not trading gold. I'm not trading gold. So my final TP would be down here, but I would put it to break even if it would go to this 37 level. This would be a nice 15-minute liquidity level. This 37.50. By the way, if anyone is interested, Topstep account, which was down with the big full tilt today, I managed yesterday to pull it back up to 55k. So yeah, yesterday I pulled it back, so everything is cool. I don't like this ranging. I think I have to close this one. As much as I would like this to go in my favor, I think I just have to close it. Like a spike down to take out that 15-minute. And I had my insy pinsy fair value gap here on the 32nd, so I jumped in a little bit too early. But the other hand, to go long here is not valid for me, at least not yet. To take out this gray area here, up there is a 1 hour fair value gap. So it could be a good target, but since London opened, I thought that, come on, we should go down to 37 and then maybe take out the 26. I don't know. I was hoping for it. Not too far away. It would be just 10 points to get there, and then I'm not closing the trade there. I think I would just put it to break even, just for curiosity if it would go down. What kind of music is this? Come on. I like this lo-fi music, but some of them are just nerve-wracking for me. I like smooth jazz, by the way, when I'm trading. But it's hard to find copyright-free smooth jazz. Okay, now I have to make a decision. Do I want to stay in this kind of price action or exit with a break-even until I can? It seems like I can. Now it tapped into this fair value gap and now it goes up. And I messed it up. I should have exited. The question of truth comes now. Can go up again, because if it starts to rally, then this is it. Yeah, there you go. I was really hoping for the dump. Maybe I should put my stop loss 45, 40. Okay, I can put it here. I'm gonna get stopped out, most likely. It's gonna go for it. Now the thing is, it's still not valid for me. Well, maybe on the 5-minute, but not so clear. Although on the 1-minute it was valid. It was valid on the 1-minute chart. It was absolutely valid on the 1-minute. But we only took out a small 5-minute liquidity. And I'm using the 15-minute as my higher time frame. And so I was thinking that maybe this wasn't enough for price to just, you know, go long. If it will, then kudos, it can go. Otherwise, we just have to wait and see. The 1-minute provided, I have the 1-minute on my other screen. The 1-minute provided a very nice long entry. No major structure break, but the problem is still that the 5-minute chart, it's not that clean. I would like to take out at least the 37.25 level to go long. So hopefully this will dump at least to this level. And if it goes here, I will gladly put it to break even if it takes me out, because I am curious if we dump to the 26 level. But I need it first to go to 37. I need it to go to 37. And I have to decide again what to do. Because my biggest mistake in trading, I'm journaling it all the time, is that I'm holding on to my losses, but I'm not holding on to my winners. Many times my analysis is correct. I'm not saying I'm a guru or something, but I think somewhere around 50% of the time or 45% of the time my analysis is correct. And the problem is when I take those trades, I'm not holding to the final target, which I anticipated. If I would do that, that would be a game changer for me. If I would do that. So I should hold my winners much longer. I would need to stick to my analysis. And yeah. Then it would be good. So that's what I'm trying to achieve here as well. Trying to hold on to my original plan. Many pro traders are saying that trust your analysis, and it's very true. Trust your analysis. Even if you fail, you executed your original plan. You held on to your plan. And if you lose, then you lost. That's it. But you executed your plan. You stick with your edge. Doesn't look good, guys, does it? Yeah, it doesn't. Yeah, if it trades above 52, it's definitely not a good deal. So I'm not sure I'm going to change my stop loss there. I would just need a spike down to 37, and then I would be quite alright with the break even. It's just so obvious that there's liquidity, which is this level right there. It's a 500 tick chart again on the left side. And you know, it's and the 25 level is so close since FOMC. Nobody. Which date was that? I'm confused. This is today. No, I messed it up. This is yesterday. Yesterday, New Year close. I think I might just exit this one now. That is just so close to take out yesterday low. Yesterday low. That's also kind of a Asian low. For me, that would be a reasonable target. You know what? I don't care. 43.25. If it takes me out, it takes me out, because I don't want to hold on to this one. That's it. We're break even, basically. I don't care if it spikes back up. I just want to get out of this trade. I know it's too early because it's only 3 points. I don't care. I just want to get out of this trade. I'm not comfortable with this trade. So it has been decided. I put it to break even. If it drops, it's awesome. If it's not dropping, then I couldn't be more happier. There you go. At least it's a risk-free trade now. It's absolutely zero risk. So there you go. That's my thought process. I was not feeling comfortable with low volume. And we're out. Okay. It's fine. I don't mind this because this price section, I still think it's gonna go down, but I just a little bit I have regretted that I entered that trade. I don't care. I don't care. I still made like $15. I just wanted to get out from it. I didn't like it. I still, it's slow morning. I mean, London opened right here. Now we can go to analyze some other charts. London opened right here. Let me show you. Let's give it a nice color. Azure. So there, this is London Open. Look at this. I don't like it. I don't like it. If it drops down, I'm going to feel no FOMO. I promise you. If it drops down, no FOMO inside me. So, but if it wants to run, then I would like to see this. And by the way, if someone went long on the 1 minute, this would have been a loss. So I'm just happy that I did not take it. I'm going to show you the 1 minute chart on NQ right now. So the 1 minute was offering a nice long position if someone wanted to go long here. Right here. Oh my God, I'm so happy I got out. Wow. Close call. There. In that fair value gap, you could have gone long. I would still not go long here. Why? That's why. No liquidity has been taken, so I would not be going long. But I know many people or many traders, even ICT traders or SMC traders, whatever, went long. And I burned myself many times by going long on these occasions when there were no major liquidity has been taken. So I'm not doing that. It's not enough for me. The first point of liquidity would be at 37 and the next one would be at 25. So I'm not going long here. The only reason I would go long, if we would see, and this is a 1 minute chart on the right side, if we would see a strong, how should I show it? So there you go. I'm gonna show it to you. Path. Where's the path? If we would see like this, like a strong displacement. The left side, hey there, Aaron Music, thank you so much for being here, by the way. You get an applause too for being here. Okay, so I'm just waiting for the crowd to stop. Okay. The left side is a 500 tick chart. And before you ask me why I'm using a tick chart, I'm using a tick chart most likely when there's slow volume, like in London. Because if there's like very slow volume, the tick chart at least shows me some kind of a direction in price, taking out levels of where it wants to go. But even the 500 tick chart is a mess right now. On the right side right now is a 1 minute chart, but I'm most likely using for my model the 30 second, which is this one. This is the 30-second model. Now you could go long here on the 30-second. I'm not gonna go long. This would be a 30-second entry right there. right there. If you want to go long now, you can. I'm not going to. I'm not going to go long here. Even if it goes all the way up, I don't feel comfortable by not taking out major liquidity. I mean, we took out a 5-minute low here, which is great. But I just don't feel that it can, of course it can go all the way up, but this is, for me, this is not enough. Taking out a 5-minute spike here is not enough for me. It's not enough confirmation. Love your being real trading. Well, I'm trying to be real as much as I can be. And Aaron, thank you so much for the kind words. And look at that, it's spiking up. Oh my god, I'm so blessed that I'm out from that short position. So let's go back. And by the way, subscribe to my channel and drop a like, please. At least drop a like. It's free, and you support me in a great deal if you can drop a like, because I try to be here for you guys as well. Or visit my blog at pip.ninja. You can join my membership, and I will love you guys for eternity if you join. It's basically also I'm not gonna lie, it's also for supporting me in my journey, because I solely rely on trading. So I'm not gonna lie. Anyway, this is a 1 minute now on the right side, and look at these equal highs. Almost took it out. So I think it's gonna go and take it out. There you go. And so this is what I'm thinking. If the 1 minute would do like a very, very strong displacement here, then I would be jumping in a long trade somewhere here if we have a fair value gap somewhere there. I'm sorry guys, could you please excuse me for just a brief moment? I do have to take a phone call, it's very important, but don't go anywhere, I forbid you. Just chill out. I need 1 minute and I'll be right back with you. All right, nobody goes anywhere. I'm here. So I'm looking for a strong displacement to the upside to continue. And this gray area here is actually a 60-minute. This is a 60-minute fair value gap, so it's very strong. And look at that. Wow. I would have been stopped out here or not. Maybe not. My stop loss was up here somewhere. Anyway, now look at that. Now the reason why I would not go short here, because we have 3 equal highs, almost like 4. 1, 2, 3. One, two, three, almost 4. This is going to get broken. That is not even a question. Maybe not now, maybe an hour later. But now I would be scared to go short. I would be scared to go short here. And by the way, if someone would like to see an update, this was the Combine account which I started on the 26th, and 2 days ago I was on full tilt, and as you can see, I reached my daily loss limit, 3,364. I was on total full tilt, and it is what it is, guys. It can happen to anyone. Yesterday I managed to pull back $3,000 on this one, so we're back at 155. No, 150. Yeah, 155. So that's how we're doing. Okay, let's check gold, because I know some of you guys love gold. I love it too. My main focus is on NQ and ES, but gold is, I don't know. Gold, look at gold. Do you really want to trade this? There's nothing to do here. Look at this. It's nothing. It's a hot piece of SHIT. I would not trade this. This is going to stay like this for until New York opens. So I don't care. Let's check NQ on the daily chart. As you can see, yesterday we finished up in this fair value gap on the daily from the 19th of October. You can't see it because my face is in the way, but this is from 19th of October, and we finished up. We went over this consequent encroachment. I'm gonna delete that. We finished here, and now we're hovering inside this area. Nothing else to see. Lots of imbalance here, mid threshold down here. Hard to determine where it wants to go. This is the daily chart again. And I guess we just have to wait. Most likely we're gonna have a ranging day. All right. So look at that. Do you guys really want to trade this? I don't know if I want to. I'm still waiting for an opportunity. For example, what I'm waiting for, I'm gonna show you. What is a consequent encroachment? Now, you know what? Let's find it out together. Let's find it out together. I just googled it. Consequent CA, short for consequent encroachment, is the midpoint of an inefficiency or gap. When price returns to these gaps, sometimes it doesn't fill the entire gap, can just barely enter the area and then reverse, or it trades into the midpoint of the imbalance. Now, I know ICT made quite a few videos about this. For example, this one. I'm not sure. This is not an ICT video, but we have quite a few explanations about these. But mainly, it is a midpoint of an inefficiency or gap, or I mean, no. I know ICT has like a 10-hour lecture about consequent encroachment. For me, in my terms, it's I try to be even more simpler with that. Come on, Tom, you can speak. 1, 2, 3. Okay. In my terms, it means that it can be a middle. Let me go back. It can be a middle of a wick. It can be the midpoint of a candle or a wick or whatever. Now these consequent encroachment level or midpoints, you can call it midpoints as well. Basically, to sum up the 10-hour lecture from ICT, the midpoints are always like magnets. That's it. And now you have the answer. I'm sorry I procrastinated so much. The midpoint of a candle or a wick. Basically, that's it. And those midpoints are acting like magnets in terms for the algorithm. If there is no other targets in the way, for example, inside of a imbalance, for example here, buy side imbalance, sell side inefficiency, if there is no targets, and this one is a huge, this one is almost like, how big is this one? Let's check this. This one is, it's not accurate, but it's almost like 300 points. So this is 300 points, this daily candle. And if you're trading intraday, small time frames here, and maybe you're short, and you look to the daily or the 4 hour and you see nothing, just a huge imbalance, then you need some kind of a compass or direction, or just where, as a target, where should it go. So I would not target the low here if I'm short up here. I would say that we should be stopping at or before the consequent encroachment, or simpler terms, midpoint. We should be stopping somewhere before the midpoint of this imbalance. So midpoints or CE levels are quite as much important in trading in my terms. And when I was reading about this before ICT, and I completely agree that CE levels are really respected by price. You can check it. Just rewind your charts and check it. It's really fascinating. I think it's like art. If you rewind your charts and go down to the lower time frames, go to the daily, measure some CE points on imbalances and long wicks, and then go down to 1 to 5 minute charts and just look at price action at those points. Price, I mean, 80% of the time, and the 80 is a big number, 80% of the time, price respects those levels, the CE levels. So I'm respecting it too. And I always mark up some important CE levels on daily, maybe on 4 hour too. ICT says, of course, it also works on the 1 minute and 5 minute CE levels. I'm a little bit disagreeing there because it's such a small time frame, but of course I'm not saying it's not doing it. But 4 hour daily chart, especially the weekly chart CE levels, those are pretty much respected, or midpoints. So if you mark up your charts, I always measure the midpoints of these wicks. For example, I deleted a line here. There was a line here from the 24th of October. I marked it yesterday when I was long yesterday on this daily candle, and my first target was the CE point. It was at 89, by the way, 889. I deleted that. I'm not saying you should mark all the candles, but for major wicks and major imbalances, yeah, I mean, yeah, Sarvis. So if you don't have to trade it. It's not a strategy. It's just a point of interest. That's how I would say it. It's just a point of interest. You put it on your charts. It doesn't really hurt, especially if you go down to the 15-minute chart. It's there. You will know when price goes down there. Then you will know, like, okay, you're on the 5-minute, and okay, we're approaching an important level soon. So then you will know where could this be heading. It's just a point of interest. That's it. And I think I said it all. So in short terms, CE levels are midpoints in wicks and candles, or sorry, big wicks and big imbalances, which are point of interest for the algorithm or price. That's it, in one sentence. Good for measuring targets or stop losses, maybe. So usually I use it for measuring take profit levels. Look at this mess. Look at this mess. I'm gonna put the vertical line here again. So this is London Open, and this is London price action right now on the 30-second time frame. Guys, this is just a hot mess, but you know what I enjoy? I enjoy being here with you guys, and Even if I'm not trading, I enjoy being here with you guys and talking about this. This is not tradable. We are down at the 30-second chart, and this is just non-tradable. I was in a short. Thank God I get out at break even. Next level 37.25 is a 15-minute low, and there's another low from yesterday, New York PM session. Actually, it was after closing time. Yeah, you're welcome, Sarvesh. You're welcome. 9.25. You will see, Sarvesh, that CE levels are extremely good if you're looking for home runs or bigger terms of targets. For example, you take partials, but you have your runners go for a CE level. I think that those levels are very good targets, respectable targets, and you know, just take your profits, leave a runner if you're trading live or maybe a challenge. Just leave that, and you will see that it will go very nicely in your direction. You'll see. It's I mean, or just rewind your charts and do some research over the weekend. You know, I used to do that. Over the weekend, I dive into these important levels, and I just zoom it out or dive into the 1 minute and 5 minute and study what price is doing there. And it's very interesting how it gets there and how it's reacting around those CE levels. So when I was listening those lectures from ICT like many times. Oh my God, I have a whole note full of, you know, I wrote everything down, and I was listening to those 10-hour lecture from CE's consequent encroachment, because I know he does like quite a few times. He's talking about it for hours and hours. But then I realized when I implemented it to my own trading style, it started to make sense. Now, for example, I'm going to give you something else. I know ICT has like 1,000 concepts and it's all complicated. I still don't, I can't trade the mitigation blocks. If you ask me, for example, what's a mitigation block, I don't want to go in that topic because I make a complete fool out of myself. Until this day, I went through a lot of things. I mean, I got funded, I got some payouts. I'm not a full professional guru, but I can't really, I don't want to go into what is a mitigation block. I know if I Google it, I will find it, but to understand it and and give it back, I can't. But that's just another example. And by the way, guys, you don't have to learn everything what ICT is teaching. I think he's a great mentor, a great lecturer and everything, but it's just impossible. I think it's almost impossible. Never say impossible, but it's almost impossible to learn everything from him. Just pick your cookie cutter, as he calls it. I love that. Pick your cookie cutter from his concepts, whichever works for you, maybe one or two. Put it together, you know, carve your own way, you know, and maybe that will work for you. For example, for my trading style, the YouTube 2022 classic entry model is my bread and butter, but I combined it with the 30-second entry model using the 15-minute as a higher time frame, and I divided it to two pieces. That's it. You can Google it, mitigation block. You will find tons of information about it. I'm not gonna go into it because I mean, I have kind of a theory what is a mitigation block, but I'm not gonna go in it because then if someone sees this VOD later on YouTube or something, I'm gonna get some comment that, oh, you're an idiot. Maybe I'm gonna get it now, but I'm not gonna go in that because I can't explain it. I can't explain it as much as there's the propulsion block too. Propulsion block, man, What the hell is a propulsion block? I don't even know that. I know it's there because if you Google it, you will find the ICT lectures. I have no freaking idea what the propulsion block is because I stuck with the classic model. I implemented one or two things, and so far it's turning out okay for me. I'm making some results, so I don't want to learn all his concepts. Now, one concept I do want to learn, and that was always interesting to me, and this is actually the last one, but he was talking about it earlier as well in the core content, which is the market maker buy and sell model. And his last video on YouTube is exactly that. I didn't watch it yet completely because I did not have the time. I was very busy. The market maker buy and sell model is, I think, is something if you understand it, and it works on lower time frames too, higher and lower time frames. So you can use it intraday too, on the 5 minute, 3 minute, even on the 1 minute. So the market maker buy, of course it's enough. The classic model is enough. It's a great model. I think it's his best one anyways, as I went through every concept as much as I could. So but the market maker buy and sell model, if you learn it, and I'm trying to learn it as much as I can, then it will give you a much bigger insight of what is going on when you look at price from the bigger picture. And that's what most important, right? Because if you see, if you start to see what is going on. For example, you're trading on the 1 minute, or I trade on the 30 second many times. My entry model is based on the 1 minute and the 30 second. And if I zoom out to the 5 or the 15 minute and I start to see the market maker buy or sell model, then that gives me much more confidence that okay, maybe I see what's going on here, and that would give me better entry points. Or maybe that would give me the confidence to let it run for my higher targets, you know. So understanding market maker buy and sell model, I think it's important. Whatever concept you're using from ICT, the market maker models are a very good background to as a confirmation for your entry model. If you know your entry model, the market maker sell or buy model is going to give you the bigger picture if you're on side or not. And that's why I think it's important to learn it. I still can't say that I recognize it all the time, but slowly, very slowly, I'm getting there. Very slowly. But I'm talking about this a lot in my Discord, so guys, if you want to join my Discord, I say it anytime, go to pip.ninja, join, and you will have everything I can give you. I'm gonna do like webinars. I'm doing it already, but I'm gonna do webinars on every week where we are talking, and I'm not just answering questions, but we're gonna analyze some past trades and entry models. So lots of interesting stuff. Anyway, look at this. We're still in the London opening range. Look at this. 52. We are ranging in 10 points. This is like a no trade. It's not tradable. I mean, who wants to trade in this environment? Nobody. Nobody. Actually, I'm gonna delete this. Nobody wants to trade this. I can now officially say that the market is dead this morning. I mean, London kill zone is officially dead. But I marked some points up here, and let me show you. This is a 1 hour Nasdaq or NQ or whatever. I can delete this, right? So this vertical line here is okay. I just screwed it up. Let's go back. here. I use the market maker model, to be honest, is the thing that saved me trading. Oh, really? Once you, it's really quite, yes. Oh, there you go, Sarvaj, there you go. There you go. Once you understand it, the market maker models, as just you said, it can be a lifesaver, but because then you will know as a confirmation to enter a trade, a sell or a buy or not based on the model. So you have the model on a little bit higher time frame. If your entry model is on the 1 minute or 30 second or whatever, go higher, try to recognize the model, and then you will see which curve are you in right now. Are you in a buy side curve or in a sell side curve? And it can really make you and save you a lot of money and make you a lot of money. And it's very simple because honestly, I think ICT was talking about this. I think the market maker sell or buy models are also happening like every day. Of course, on the low time frames, like 1 and 5 minutes. You can see these models on the lower time frames too. Now it's taking out most likely the 37. This is a 15-minute time frame on the right side. The left side is a 500 tick chart, again, for someone who's new here in the stream. I'm just watching it because the volume is low and I just want to see price behaving like, not just with small gaps, but where is price heading to. So, hello Teacher FX is here. Come on, man, you deserve an applause. No, I'm not in a trade. I was in a trade. I'm gonna show you. Oh my God, what did I do? Let me delete this. I'm gonna show you. Hello Teacher FX. I'm gonna delete this. This gray area is London Open. So basically we're at no man's land. I was in a trade right here. As you can see, I was in a sell at London Open. It spiked down. So I thought that we were gonna take out the 37 level. Then it went back up. And then it was just hovering, and then it also spiked down, then it went back up. So I said, okay, I'm gonna get out. So I got out at break even. Actually, I made $15. And look at that. It's doing nothing. We have some equal highs here. Basically, we are ranging, and it's very bad. It can take out this one. I'm not interested in this. Yeah, I mean, we can wait of what's gonna happen, but nothing is happening. So if I go to the 60-minute chart, on the right side is the 60-minute chart. We have, this is the 1 hour, we have a 1 hour fair value gap just above 67.25. This, and we also have a volume imbalance here as well, so it's actually quite strong. 67.25 to 86.50, this level. And now it goes for my level for the 37. Now I did not want it to take any other position because we are in a hot mess. I think nothing is going to happen until non-farm payroll, which is still 3 hours, more than 3 hours from now, 3 hours and 30 minutes. The only reasonable thing which I see is still that price can take out the 25.50 level. Let's go back to 30-second chart. Come on. This is the 30-second chart. But the problem, guys, please push the like button, by the way. But the problem is, well, on the 5 minute, there you go. So that was my first target, but I exited. And now the only reasonable target, since it broke down, and you can see it on the tick chart too, is the 25 level. So the question is, do we want to go for a quick scalp if we get 10 points? I don't know. We have to decide it in 16 seconds. 37. We have 10 points here. We have 10 points here. So if we are leaving with the gap, very risky trade, guys. Very, very risky. Very risky. So then I would like to see this level to be taken out. Or if it goes up, I'm just gonna close it with a small loss and wait for NFP. I don't care. Well, kill zone is over. Well, almost over. Like, yeah. Question is if it wants to take this one out or not. It did take out that 15 minute, and you know, if it's doing a displacement to the upside, I'm just gonna close it. It's 10 points, so I'm not really scared of this one, and that's it. 37, 47, yeah. So if it makes a huge displacement here, I'm just gonna close it and wait for NFP. So this would be just a 10-point trade. We have the 10 point, and basically that's it. So let's wait a little bit. If it spikes up, I'm just gonna close it. I'm gonna put a hard stop as well. It's not my final stop loss. I'm gonna move it closer or close it manually as I see price action unfolding. So I don't know. I want the 25 level to be broken. If we're down here, I just want it to be broken. Or if price starts to consolidate here, I'm just gonna close it again, because, you know, why should we wait? The problem is we don't. I thought that we're gonna have some volume. The tick chart started to move, so I thought that we're gonna see some volume, but you know what? Actually, I don't know. I don't know if I want to sit here for an hour and watching paint dry if it's not moving the way I would like it to move. So if it's not doing anything, even with a small loss, I will cut it and we'll wait for NFP. This was my original analysis to take out the 25 level. F it. I'm not waiting. I'm not going to do that. Volume is too slow. I'm not going to do that. Sorry guys. I'm a chicken this morning. I'm a chicken. Yesterday I was killing it in the New York session. But this London session is just it's not working for me right now. I'm sorry. I'm sorry I disappointed you guys. I'm sorry. I can't do this. Do you think the tick chart is easier to trade? Honestly, the tick chart you're in Euro USD sells. Man, I was not even checking Euro USD since like 2 months. In the past 2 months, I barely looked into Euro USD. I'm taking it easy. I absolutely do. And by the way, hello Teacher FX. I want to thank you so much for. I was seeing you on Instagram. I did not upload anything for Instagram. I will, because I know there's some people there. Thank you so much for mentioning me months ago and weeks ago. And I know you were writing me. I did not wrote back because I was very busy and I'm lazy many times. So thank you so much for shouting out. So anyway, I'm taking it easy, but look at that. Do you want to feel some FOMO? I'm starting to feel some FOMO. The 25 level is gonna get taken out, guys. But still, I don't like this. Is my. I mean, whatever I trade, the slow price action just kills me. So I thought that London is gonna be a little bit. Anyway, let's go back. Tick chart. So the tick chart. Sarvesh was asking about the tick chart. I think the tick chart is very good, honestly. Whatever you hear or whatever they say about tick chart, this left one is a tick chart. Let me go back to, for example, to yesterday. Yesterday, this is New York time on the chart, by the way. Let me go, there you go. No, it's not. Yeah, I was trading this. That's why it's marked. It's marked from yesterday. So this was New York 1018. And look at that. This was, I'm not gonna zoom out, but this low was taking out a lot of liquidity between 10 to 10:15. Price was taking out some higher time frames like 15-minute, and it was in a fair value gap, something like that. So then it started to move up, and there was some nice targets up here. And see that beautiful here. ICT concepts or smart money concepts, in my opinion, are perfectly working on the tick chart too. I entered here in this gap, that's why it's marked. And look at it, boom, went all the way up. Or there was another one somewhere. There you go. Actually two. So tick chart is working. There is one entry up there. Perfect. No, it's not. Sorry. No, it's not. It was not that. It was not that. Sorry. Yeah, this was it. Sorry. Oh, this was. There. Perfect entry. A little bit of structure break. Targets down here. I'm not going to go into details, but look at the concept itself is working nicely on the tick chart as well. And it gives you a cleaner price action sometimes. So I love the tick chart. You can go down to the 100 tick chart as well, but it's really jumpy. So be careful. I'm not saying that the 500 is the bread and butter. You can choose your whatever suits you. But I think it actually gives very nice entries too. Very, very nice entries. Let me find some. Short entry here, most likely with a stop loss. If you went short on a tick chart, for example here, it could be a nice take profit, but if here, then a stop loss. Let's see another entry. Beautiful entry here. Look at that tick chart. There you go. Beautiful entry. Go short. Boom. There you go. Here. Beautiful. So don't, if anyone tells me tick chart is BS, look at that. Boom. There you go. Depends on what's your risk reward, you know. Boom. Take out some lows. We're in the afternoon. You went long here. Stop loss. Boom. It happens. Looks good. I kind of feel maybe tick chart will be easier to. I think the other day there was a report. I'm not sure which day. There was a report on Top Step TV with one of their top traders, who is only trading on tick chart. And some guys were, what? What the hell are you doing? Tick charts? Come on, man. And he's one of their top traders, taking out money all the time, and he's only using tick charts. And that's it. So tick chart is a working thing. Don't let yourself be, blinded by some comments that, oh, it's BS. It's not BS, it's working. If you find your edge in tick charts, Nothing. Okay. Nothing. We're just backtesting the tick chart here. We're already in the afternoon. New York afternoon yesterday. There you go. Stop loss here. You entered short. Stop loss. Let's enter a short here. I'm not even looking anything. It's not good, but actually this one broke structure, so you enter short somewhere here. Stop loss. Now this one will not be a stop loss, and I know that. There. Ooh, that was a close one. you would have been sitting in this one for 2 hours, but it was a nice TP. Anyway, you get what I mean. So the tick chart also gives you some nice entries, in my opinion. I entered trades based on the tick chart, so if the 30-second and the 1 minute is crazy or indecisive, the tick chart can give me a direction, or not a direction but a confirmation that okay, it goes where I want it to go, and then I just enter. Oh my god, this London morning is, look at that. Oh, and by the way, kill zone. Sarvesh wrote, it's the kill zone is over. I know, and I was studying kill zone. I was reading about it, collecting information from other traders as well, and yes, kill zone is important in terms of volume, but there are so many setups outside the kill zone, especially if you're trading 1 minute. Lots of setups. So if I would just sit here throughout the day, I would find trades outside the kill zone all the time. And it's not me. ICT is the one who said it in his Twitter spaces. I'm not gonna tell. I can't tell you which one was it. About 2 months ago. It was a 4 or 5 hour Twitter space, and he also said that if you just sit down and you're using the 30-second chart for entries, if you go down to the 30-minute, you will find the trade. At least at least 1 or 2 trades, it will be there. It will be repeating. The model will be repeating itself. It's there, especially on the 15 seconds, because he said he goes down to the 15 seconds. Maybe you're not going for 50 points or handles or 30, but you go for 10 or 20 points. But whichever time of the day you sit down for an hour and you go down to the 30-second, 15-second, it will be there. It will present itself. That's it. Even, and he also added that, even on a slow day, for example, Christmas Day or whatever, even on a slow day, if you dive down to the quantum world of 15-second or 30-second time frame, you will find it, even on a slow ranging day. But that requires some skill, and another one, some wisdom, which I wrote down to myself. Some pro traders were asked that one short sentence, what is the key to success in trading, let it be futures or forex? Chart time. Two words. Chart time. Spend more time at the chart. I know your family and friends or spouse is gonna hate you, but if you like this with passion, MetaTrader brokers, very good add-on, Sarvesh. On MetaTrader brokers, even if you could, because I know AMP or one of those are trying to add 15 or 20 or 30 seconds, but on MetaTrader brokers, even if they would have that on a MetaTrader Forex broker, it's impossible to trade the 15 and the 30-second charts. You can't. You basically, and with Forex pairs, you just can't trade the 15-second or 30-second. You can do it with NQ or some other futures, but you can't do it with Forex pairs. So yeah. So as I was saying, as long as you have a passion, and you love this shit, which I do, I love this shit, even if it cracks my life many times, many times. 2 words, 2. Chart time. Chart time. Yeah, spreads and commissions will kill you if you're doing this at Forex broker or Forex prop firm, whichever. Spreads and commission is going to wipe you, so it's not worth it. So chart time, and as the more chart time you take, the more successful you will be. Like the old saying with Tiger Woods. He was playing golf, and one of his competitor or someone walked to him and said, after a very, very, very good shot, and hey man, you're getting just luckier. You were just lucky. And he just said, it's interesting. The more I'm spending time here, I'm getting more luckier. Of course, it's an old saying. It's good for everything in life. So the more time you spend with the charts, the luckier you will get. So that's what some super pro traders said. Millionaires, in fact, who made millions and who are not trading prop firms, said that chart time. That's it. The more time you spend with the chart, the luckier you will get. Interesting. Of course, you have to use your brain too. It's not just luck. It's not just, of course, throwing money in there and wait for something to happen. Guys, this session is just dead. It's true. After Friday, your mind just starts seeing, there you go. There you go. I'm not sure you guys might be familiar with Patrick Wieland. He's a huge YouTuber, trader. I don't like his trading style. You can feel the difference. There you go, Sarvish. There you go. Exactly. So yesterday he was asked how is he trading with 15 contracts with futures, because he many times goes to the daily limit and etc. But still he makes huge money every month from trading. And he always gets the question, even from top step risk managers, that, hey man, don't you think that, going with 15 contracts, I'm using one contract, don't you think that 15 contracts is a little bit overkill? And he had the greatest answer. He just put it out to his Twitter as well. I liked it, as Trump said once, that he doesn't really he's not thinking about it. He doesn't think about that, if it's too much or not, because that's the way he learned it. Some traders, for me as well, 15 contracts is just suicide. You're killing your account instantly. For him, it's normal. And it's only because my brain has too much information which is holding me back. Maybe in a good way, of course, to use those 15 contracts. But Patrick, he goes all in. He goes 15 contracts at New York Open. New York opens up, in 10 minutes he's in 15 contracts. But he makes $5,000 to $10,000 in 30 minutes or 15 minutes. On the other day, he blows it. That's also a risk management style, That is something you can do. Guys, I'm blessed and thankful to God and the universe that I did not trade at this one. Let's check gold again. And look at gold. Oh my God, we're so lucky we're not trading gold. Maybe you can go for yesterday's high. Let's go to the 1 minute. Yeah, so if you want to go for yesterday's high, you can go for it. You can go from it right now. First entry would have been here, so you already missed it. You took this out, so you can still write this one if you want to take yesterday's high. I'm not going to trade gold, not a chance. Before NFP, no chance I'm gonna trade it. And by the way, NFP is crazy. I mean, I'm gonna show you what happens at NFP. Since we're talking, I hope you guys don't mind. What the hell is going on? So, this is what happens at NFP. Can I do this? I hope I can. Actually, you know what? I'm not gonna show it here. I'm gonna show it. Just give me a second. Don't go anywhere. It's already loading. Alright. So there's a whiteboard. So this is price at NFP, before NFP. News comes, then boom. Accumulation, manipulation, and that's when the real move starts to happen. Distribution. So this can be the opposite way too. So whichever spike does whatever gold or index futures takes the first time, that would be the manipulation. And after it rips everyone's face off, then comes the real move. Then comes the real move, which is most likely taking the previous significant lows or highs. And that goes the opposite way too. So that's it. That's how NFP day goes on. So you have to wait for the news, take everybody out, everybody jumps on the train, bandwagon. Okay, let's go. Retraces, everybody, you know, everybody's at 50%. Hey, let's go. And then price boom goes down. What the hell am I doing? So yeah. That's NFP for you. That's NFP. It's always the similar, Sarvesh. Always. GUE went up all through London. NFP smashed down and stopped everywhere out, then reversed. Exactly. Sarvesh, that's exactly what's happening to all the markets almost, which is mostly infected by NFP. Gold, index futures, CFDs, you know, always. Just like you wrote it, exactly. So wait for the news, wait for 20 minutes, 30 minutes, whatever. Maybe 10 minutes is enough, who knows, you have to see how fast it moves. It takes significant points out, takes everybody out, like, okay. And even I'm confused sometimes because it's such a strong move that many retail traders, you know, it's retracing up and down, whichever it goes, and retracing, and then jumping into the short again. Okay, let's go. Or jumping into the long. Let's go. Let's continue the movement. But no. No. That was the manipulation. And the real move happens after everybody got taken out. The real move. Sometimes even double. Sometimes not even just once. So it takes you out on the up or down. It goes the opposite way. And you think it's done. But no. It does like a seek and destroy, and then it turns again and goes back up. So it can repeat itself. I realize that. But like 6 or 7 out of 10 times, it rips everyone off and goes the other way. That's how NFP is happening. Not gonna lie, I blew a funded account NFP last month. I blew a funded account. I was basically all in, and I was expecting the same. It was a 50k. It was a 50k funded account at Topstep. I can trade 2 full contracts with a 50k account. So I don't even remember. It got down, And I said, okay, this was the move. Now it's going to take the real move. And then it just dropped or something like that. Dropped more and took my limit out. So I was very pissed off. And then I realized I need more caution to trade these futures than a 50k. So if you really think about it, if you're trading a 50k funded account with Topstep, you're only trading a 2k account. That's only 2k. So you're really managing $2,000. That's all. So don't forget that. And if you're saying that, oh, I'm 150k funded, and I love those YouTubers out there. Well, it's actually, you know, I can say the same. I'm not saying I won't. They're saying that I am funded with 450k. I'm a 450k futures funded trader. Yeah. But in reality, you're only funded with $13,500, right? Right, because for a $150,000 account, you have $4,500 to manage. So that's only $4,500 which you trade virtually, of course. So if someone tells me I'm funded with 150k, no, you're not. You're funded with $4,500. Yeah, 150k account gives you 4,500. The daily loss limit is $3,000. So basically, you have a $3,000 limit for the day. I try to limit myself, even on my funded account. I have a soft rule. Yeah, exactly, Sarvesh. Exactly. Risk 1%. And actually, yeah. So on my funded account, I have 350k funded accounts. My soft rule, I can't really say that in other ways, is that I am stopping. I have to stop trading when I reach around between $1,000 to $1,500. So if I go somewhere around $1,500 on the funded account, I know I have to stop, because then my mind is not working good. And I'm using only one contract. So with one contract, if I go down to $1,500 minus, I just have to say to myself, okay, something is not right. My mind is not clear. Something is not good. I have to stop. Because 1,500, you can still bring it back relatively easily. But if I go down to $3,000, that's hard to bring back with one contract. You have to risk more. And from that point on, it's going to be much harder. You have to work for recouping that loss, which is possible because you're even a better trader if you can show to yourself that you can recoup $3,000 with one contract. That's a great achievement, even if you're just climbing after the hole, even if it takes you 2 weeks or 3 weeks or whatever. And the mindset for me, the psychology is completely different when I trade combine account and funded account. Everything, the magic is changing. The magic is changing. Absolutely different. I see things differently. My mind starts to question me. I question myself. About trades that I know I would be taking on the combine account because it's so obvious. But on the funded account, I got scared. I'm not afraid to admit it. I got scared, like, oh, really? Should I not? Or what should I don't want to feel the pain again. I got scared. So lots of psychological. The magic is changing once you go to funded. Whoever says it otherwise, is not completely transparent with you, because your brain is starts to think differently. Whichever company you're using, let it be Forex prop firm or whatever, once you go into a funded account, your brain is acting up weird. You start to take, like, you make stupid decisions, or you don't make the right decisions that you should make, or you know that that's a good trade, but you're scared, you don't want to jump in. Very interesting. The psychological aspect of trading is a mystery still for me sometimes. Have to be a good trader somehow, but you know, the biggest enemy in trading is not the market, it's yourself. I can prove to myself that I can trade on a combine account or challenge account. I can do that. But on a funded account, it starts to be interesting. On my live personal account, which I trade, it's a very small capital, but I can also do the same. Anyway. I talk too much because there's nothing to trade here. NQ, look at NQ. There's nothing to do here, guys. Nothing to do here. I appreciate if you were listening my gibberish talk about some trading stuff. But I'm not going to take any more trades until after NFP, so I am waiting. I am waiting. No use for this. I love to be here, but there's just nothing to trade. Look at the 30-second chart. It's just a complete mess, a pile of BS. Okay, guys. Anyway, thank you so much for being here. Please subscribe, push the like button, visit my blog pip.ninja or tomsabo.biz. Follow me on Twitter, and you know. See you guys soon. I will upload some new shorts. I started to make short videos. I'm not so good in editing, but I want to make more content on my YouTube. So I have some topics which I want to talk about, and there's going to be a new section. It's gonna be called Walks and Talks, which is going to be like, I'm going to be taking my, what's this, stick or whatever, you know. I'm gonna bring my phone, you know, I'm gonna be walking and I'm gonna be talking about life and trading. There's a very nice place near where I live in the forest, and I'm gonna be talking while I'm walking. That's gonna be good, because all this crap which is in my brain, I'm gonna be talk it out on myself, and you can watch it if you're interested. But I want to give out useful information. Okay, guys, thank you so much. I'm not gonna do any trades because the market is dead officially. So that's it. I'm not pushing it. See you guys. Sarvash, thank you so much for the talk and the information. Hello Teacher FX, thank you so much for being here. Aaron, thank you. Stop It Seller as well, thank you for dropping by. Who else was here? No one else. So thank you so much. I'm gonna be leaving now, and have a great Friday. Have a great weekend. I'm gonna be uploading some content, and that's it. Enjoy your day. See you guys, and have a great day. All right, so bye everyone.